All right, now another thing about futures trading is this: the leverage gives you an opportunity to buy much more than the normal, the normal quantity if it was be on spot. In leverage, in futures trading, you can actually buy more than 2 Bitcoin with your little capital. All right, okay, let's take for example, let's place a trade on this. All right, now we are buying BNB. Let's say we are buying BNB. Okay, before we go further, let me tell you something. One of the secret I use, you may not understand it now, but maybe on a later you may understand it, get it. You're about to open a margin, a position with a margin. Now I don't normally use isolated, I trade on with cross, but let me not confuse you first. So this is, from here you can, just like on spot, you can select the margin you want. We are always advised not to use, this is risk management, we are not advised not to use more than 4% of our available balance, or 5% of our available balance to open a position. If you have $100, use 5%. 5% is around $5 to open a position. In this way you are avoiding being sent to village and liquidation. All right, there are things you need to be mindful when trading on futures. Your liquidation point. When I'm trading, I try to maintain 0 liquidation points, and there are some strategies to it. The strategy is using 4% of your available balance to open a position, and only open a position when you are sure of it. Now, using 4% available balance is quite huge if you are trading real big, like if you are trading with huge amount of money, not just small capital. Like if you have about $1,000 on your futures account, 4% of that $1,000 is about 4% is about $40. If you open a position with the $40 margin and on a times 10 leverage, that's huge money if the pump goes in your favor. And then you also maintain a 0 liquidation point. All right, let me show you. Okay, we can still use our current market price. Let's open a position. Let's use 5% here. All right, and buy. We are longing, buy long. Now we use markets. If we had used limit, it will stay here. Just wanted to open up. Now this is how it looks like. Now this is my liquidation point price. My liquidation price. It means that if this price falls keeps falling, I bought at, see my entry is here. My entry is 367.6 and now the market price is 367.18. now my liquidation price, this is my main focus, because if the price keeps falling and falls to this thing, I'll lose my money. But I'm on isolated, so the only thing I'll lose is the $4 margin. See the margin here? I'll only lose this $4 margin and nothing will happen to the rest here. Alright, okay, so I was able to purchase the size of 0.06 BNB with $4.2. On a normal basis, it can't happen. Okay, that is why, that is futures trading for you. Because of this 5x, it's multiplied whatever it is. Alright, now this is my unrealized profit in USDT. I still have 0 cents, fluctuating 1 cent. It has increased in, you can see the movement here. Alright, so this is it. Now let me show you also isolated. Okay, you can open another position. Alright, so this is it. You can also set your stop loss and everything, position, take profit. We bought at 367, let's say at 370, take profit, then stop loss. Since we bought at 367, say at 365, sell off. So it will also calculate what we lose. We'll be losing about 15 cents if the price hits stop loss. Now take profit. From here you can see. Alright, click on confirm, you will see it here. Just like sports, you can see your other histories. Alright, this red negative sign, you understand what it means. Open orders. These are the stop, take profit and stop loss that I imputed. Okay, this is exactly how to open a position. So let me close this position now and see how I did it. I clicked on close position and everything is back. Right, now let's see cross. This is one of my best. Okay, so cross, still on this. If you notice, you can go back and notice our liquidation position, our liquidation price on why we used isolated margin. Now on cross, you will see that with this same setting, you see that we may not have a liquidation price. Okay, let's try it now. We used 5%. All right, the price is going 5% buy. We are already in. Can you see it? Liquidation price. You may not understand this, but this is my own secret. This is my strategy. Zero liquidation price. There is nothing sweeter than seeing that you have no liquidation price. Zero liquidation price. You can sleep, you can go to bed, because there is no way this coin will be falling and falling. In fact, it will be falling, but there is no liquidation price. All you need to do is just put on your patience garment and wait for it to come back. You may see minus, if you entered with big money, minus even half of your available balance. So why you are seeing no liquidation price? Because you have, even with this, from this margin now, you have you have this backup, you have this as backup. So this automatically increases your chances of not getting liquidated. But on isolated, once you use isolated, it will your position will be isolated only to this margin. The calculations will be based on this margin. So whatever goes, however it goes, and it comes to your liquidation price, it will sell off and it will just liquidate your money. But now this available balance and using cross has given this a more chance to recover before you can get liquidated. But luckily for me, with the 5% and times, I can never get liquidated on this position. I hope this is very clear to us. All right, so that is exactly it. All right, so if you want to trade on futures, like I said in the group, and our challenge, it means, if you look clearly, our challenge states 100 margin, $100 margin. $100 margin. That means you need capital. You really need capital for you to open a margin of $100. That means your entire capital should be around $1,000 to $2,000. So that challenge, if you are in this category, you can try it out when we are ready. But if you don't have up to that, you can still work on your own pace, and when we are ready, I'll put up the rules and other guidelines. So for these futures, you can just try out with my explanation, both on isolated and cross. Even if it's $5, you can put on your futures account, and remember to use 5 or 4% of that $5 to open a position, and don't use more than 10x leverage. Thank you for this, and more explanation will keep going on wherever you are confused and other. Thank you very much.